Joining us is Ashok Bhundia. He's senior fixed income strategist at Bank of America, Merrill Lynch. Ashok, thanks for coming in. Let's talk a little bit about what they said. And, 104 still is very high.
Yeah, I think we know quite a lot about what happened at that meeting, so it wasn't much of a surprise in minutes. But one thing I think is striking at the moment, central banks are very cautious about the volatility we're seeing externally and the concerns about global growth. So many of them, including the RBA, are now exercising some caution about signaling further rate hikes. They're not definitely about to cut. We don't think they will cut soon, but hikes are off the cards for the time being.
Yeah, there is at least one bank out there suggesting there could be a cut in December. Do you think that that's what's the likelihood of that happening?
Well, the market's pricing has priced in about 50 basis points at its trough. We think it's unlikely still. Yeah, they're still talking about inflation concerns, so it's more of a wait-and-see strategy rather than cuts, we think, by December.
Okay, what are your top currency picks at the moment?
Well, we like the CNH as a proxy for the RMB, given the way the fixing has gone in recent days. Clearly seems the PBOC is determined to help the global rebalancing now at a stage where they probably want to slow down FX reserve growth at the moment, given their concerns about the dollar and potentially a further bout of QE.
Is this a deliberate policy? Have they changed policy, the central bank there in China, and they decided that they're going to be more aggressive in revaluation?
We think so, actually. We think they are going to be at the margin more aggressive. Unlike 2008, that volatility where they pegged the renminbi against the dollar and kept it fixed, they're now fixing it lower progressively. An annualized rate of 11% at the moment. That's only a few days, but we certainly think they're determined to help consumption. They have a long-term goal to boost domestic demand and consumer demand in particular. This will help. Let's
not forget, of course, that we have seen it appreciate against its US counterpart. What about against the yen? What about the Swiss franc? What about the euro? Europe is its biggest trading partner. So we've had a considerable, actually, devaluation take place because of those currencies appreciating against the US dollar.
Yeah, so they are looking at the trade-weighted basket as well as the dollar. I think politically it helps to fix it lower against the dollar. Congress will be off their backs at a time when US growth is stalling. So certainly a weak dollar is helping them to fix it stronger against the dollar. On a trade-weighted basis, you're right, it's fixing not as strong as it is against the dollar. So that's the optical illusion here.
Okay, what about the volatility that we've had in markets in recent days? How does that play out in the foreign exchanges?
Well, we think it's been mild by post-Lehman crisis standards. So at the moment, we've had some pullbacks with equity markets selling, foreign investors liquidating stocks in the early part of the volatility. That's negative for currencies cyclically. But structurally, we're bullish Asia FX. We think the fundamentals are so much stronger in Asia, productivity, fiscal dynamics, and then there's large infrastructure needs. So there are investments out there in Asia where foreigners will be structurally long in the long run. It's just cyclically some of the currencies are vulnerable to pullback.
Well, let's just look at the yen very briefly before we leave things. 76 odd at the moment. I mean, they keep on. They've intervened twice. There's been, of course, a rally back, and then, we're back to square one again. What does the Japanese government do, if anything?
Well, I mean, I think the only thing that's sort of stalling the yen appreciation at the moment is fear of intervention. It could get to 75, we think, in the short term. The yen carry trade, as we know, has been in full swing. Now with the volatility, some of those have been unwound. So that's helping to strengthen the yen. In the short term, it's intervention that's putting a floor under it. We think it goes to about 78 by the end of the year. There will be more forceful QE-type operation from the BOJ introducing more yen liquidity. That's the solution that we think. They're going to be fighting QE with QE, essentially, against the dollar.
Ashok, thank you very much indeed. Ashok Bhundia there from Bank of America, Merrill Lynch.